Welcome to Tally on Wheels, the best cloud-based audit automation tool available for finance professionals like chartered accountants, tax practitioners, and accountants. With Tally on Wheels, you can reduce your audit process time by up to 90% compared to traditional way of auditing. Scrutinize the ledgers and generate analysis reports with a list of anomalies even before you start an audit. This will give you precise insight into the books of accounts so that you can plan your focus areas for the audit and save time and resources. Generate statements like revised Schedule 3 financials auto-linked with trial balance, T-format balance sheet, cost center analysis, detailed annexure of vendor-wise incomes and expenses, multi-entity consolidation, and much more in a few clicks. You can also generate and customize MIS reports effortlessly within seconds and ensure extraordinary experience for your clients. What's more, we are coming up with features like generating integrated working papers for 3CD, GSTR 9 and 9C, reconciliation of tedious returns filed versus books of accounts, and much more to save your time and effort. Are you excited to get rid of these manual tasks and go further in your professional journey as techno-finance professional? Register into Tally on Wheels today.
At rest. With me, Jagdish is there. Venu sir will be also joining shortly. I would like to Jagdish to start the session for today, which is basically on what are the recommendation of GST Council, and based on their recommendation, what are the circulars and notification they have issued.
Thank you. Let me share my screen. Yes. Yeah. The agenda of today's session is, just a second. Yes. This is the agenda of today's session. First, we'll discuss on the recent clarifications as given by the CBSE via circulars, and then we'll discuss on extension dates of amnesty scheme, and then the rate note changes in the rates of goods and services, and pending recommendations of GST Council, which are not yet notified. We'll discuss at the end. So first, we'll see the clarifications. What are all the clarifications recently given by the CBSE? First, we'll see the interest. So interest on wrong utilization. So as we all know that section 50 subsection 3 provides that interest would be applicable only when ITC is availed and utilized. If I avail ITC and not utilized, then interest will not be levied. So for the rule 88B of CGST rules, it provides the manner of levy of interest in case of wrong availment of input tax credit and reversal thereof. As per this rule 88B, interest will be levied only when the balance in the electronic credit ledger falls below the amount of input tax credit wrong level. Let's see. So there is a lot of confusion. What balances I have to consider for this, and at what time the balances have to consider. For all these confusions, circular has given the clarity. We'll see what circular has given. It is clarified that in case of, let's take, if I avail the wrong IGST and utilized it, and what balances, under what head the balance I have to consider. Circular is saying that all the balances under the head of IGST, CGST, SGST can be considered as to pay the IGST liability. We can use the CGST, SGST, and IGST balances. So further, it has also given a clarity that the compensation cess cannot be considered as a balance in the electronic, because compensation cess can be adjusted only against the compensation cess liability. Therefore, against the IGST liability, you can consider the balances of IGST, CGST, and SGST. With a small example, I will explain this. Okay. let's say in the month of January, I have held a IGST ITC of 70,000. So after that time, I'm having the credit balance of 75,000. In that case, whether I am required to pay the interest liability? No, because I am maintaining the balance of IGST and CGST, SGST in excess of wrongly availed and utilized ITC. Let's say I have carry forward from Jan to July. For the month of Jan, February, March, I'm maintaining 75,000. Whereas for the month of April, May and June, it has shortfall to 50,000. Only for the 3 months, I need to pay the interest. That is for the period of April, May, and June. And the interest liability will be on that 20,000 only. So clarification has given only for the IGST in this circular. What about the CGST and SGST? If I have availed the CGST and the SGST and utilize it also, whether I can consider all the balances and electronic ledger of IGST, CGST and SGST? No. For CGST liability, you can consider only IGST and CGST, because against the CGST liability, you can utilize, you can allow to set up only IGST and CGST, but not the SGST. Similarly, for the SGST liability, you can set off IGST and SGST. That's why you are not allowed to consider CGST credit. So, Ashika, would you like to add anything here?
Yeah, in this, like Jagdish pointed out, this manner of clarification which they have brought out for interest computation, it only for IGST. Only for IGST, they are saying you have to consider total electronic credit ledger balance. When we say total electronic credit ledger balance, it means I, C, S. All these three total. CES will not be included in it. All these three total, you have to consider that if that total, which as on the date of reversal, now suppose IGST, which you have wrongly availed and utilized, relates to April month, 70,000. Now, as we are standing in July, so in July month, electronic credit ledger, I will see the closing total of that, excluding CES. If it is more than 70K, then I'm not liable to pay interest for IGST. But if it is less than 70K, then you are liable to pay interest on IGST head. So this clarification is only for IGST. Now, you can ask the question why it has come for only IGST. The thing is that if you all remember, there is a rule 88A which talks about order of utilization of ITC. And in that order of utilization, it has been specified that you have to use IGST first, exhaust IGST first, then only you can move to CNS to compensate. Because obviously, if you will notice, most of you people must have gone into dispute that why I have been asked to pay interest on IGST, because it is your order which you have specified under law, because of which I am not having any IGST in my individual head of IGST. So that's the reason they have come up with this clarification saying that for IGST, interest will be calculated in this manner. Now, another thing, if you will notice, if you will go to the calculation of interest, which is specified in Rule 88B, if you will see that over there, everywhere word which is used is input tax credit. Nowhere it is mentioned as I, C, or S. It is used the word input tax credit. When the section 53, which relates to interest on wrongly utilization of ITC, use the word input tax credit, rule also use the word input tax credit, then why I should go on individual head to calculate my interest? So that's the another point with we as a consultant, we are doubting it. So on that basis, they have come up with this clarification and they have clarified that for interest, you go ahead with total. Another point which Jagdish very beautifully pointed out, that what about CNS? Because when we come to CNS, on that also we should go by total or we should go by individual head. because clarification is only given for IGST. So that means indirectly, are they saying for C, I have to C only, or for S only SGST? Now to this, it's our opinion that for C and S also, not total, but for C, I can see I plus C, and for S, I plus S. I should take into consideration for the purpose of interest calculation. Though for this, no clarification has been provided by the government till now, but it's a manner, like I said, about the section 53 and rule 88B. On that manner, this is our interpretation, but obviously department will obviously dispute that fact, but it's on you to decide how you want to move forward. Over to you.
Okay, thank you. Now we'll see what are all the clarifications have provided for the input tax credit. First, 2A versus 3B. Before moving on to the exact issue, we'll see the history of availment of input tax credit evolve over since the inception of the GST. So at the time of implementation, GST introduced a matching principle, and then from August 2018, GST 2A made available on portal. And in the time of around 9th October 2019, Rule 36.4 has been introduced. That is restricting ITC 2010-5 and the. And in the August 20, GST 2B started available on GST portal. And from 1st Jan 21, Rule 60 amended and recognized GST 2B as a return. And from 1st Jan 2022, Section 16, subsection 2, Clause AA has been introduced. And similarly, the same way, Rule 36.4 has been amended. So, Rule 36.4, as I discussed in the previous slide, it has introduced from 9th October 2019. As per Rule 36.4, at the time of implementation, it allowed only 20% of additional credit, which is reflecting in a 2A. That is, if my credit in 2A is 100 rupees, maximum ITC I can avail is 120. And then it got reduced to 10% from 1st Jan to 31st December 2020. And further, it reduced to 5% from 1st Jan 2021 to 31st December 2021. And from 1st Jan 16 to clause A has introduced. That means only the ITC which is reflecting in the 2B, only that ITC I can avail. So this is the background of availment of ITC since the inception of the GST. So earlier, CBIC had issued a circular clarifying the manner of dealing differences between ITC claimed in GST 3B and reflecting in GST 2B for the financial year 2017-18 and 18-19. And that circular number 183. This will be applicable only for the period 2017-18 and 18-19. So recently, Karnataka High Court in the case of Wipro Limited has held that the benefit of the circular, this 183 circular, should be extended to for the period 2019-20. So recently, GST Council has recommended that the circular should extend for the period 2019-20 till the date of introduction of Section 16, subsection 2, Clause AA. So, as I discussed in the previous slide, Rule 36.4 of CGST rules have been introduced with effect from 1/10/2019, which restricts claim of credit in excess of 2010-5 of ITC reflecting in 2A periodically. So, with this background, many doubts have been raised with respect to manner of dealing with differences in such scenario. As per this, we'll see what the circular has said. As per the circular 183, if there is a difference between the GST 3B and GST 2A, then in such case, certificate is required in order to avail the difference ITC. If the difference is more than 5 lakh per supplier, if it is more than 5 lakh, then CA or CMS certification is required in order to avail the ITC. The certification should state that he has paid the taxes to the supplier, and supplier has remitted the taxes to the government through the GST 3B. And similarly, if the difference between GST 2A and 3B is less than 5 lakh for supplier, then the certification from the supplier is required in order to avail that differential ITC, which is not reflecting in 2A. So that is the summary of the circular number 183. So council has recommended, and the circular also clarified that the same circular will be applicable for the subsequent period also, that is for 2019-20 and 2021 till the date of implementation of section 16 subsection 2 clause A, subject to restrictions provided in the rule 36 sub rule 4. So till 8th October 2019, there is no restriction in availing ITC. But whereas from 9th October 2019, Rule 36.4 has come into the picture. So maximum ITC that I can avail it only the 20% of the ITC that is appearing in the GST 2A. So let's say if my ITC I have availed it 5 lakh, but the ITC is reflecting in GST 2A is 3 lakh. The maximum ITC that I can avail for the period 9th October 2019 is 20% of 3 lakh. That is 60,000 maximum I can avail. Even that 60,000 I can avail only on produce of this certificate, either the supplier certificate or CSC or CMS certificate as may be required based upon the difference amount. So similarly, from the 1st Jan 2020 to 31st December 2020, and that restriction has reduced to 10% and 5%. So from 1st Jan 2022 onwards, I can avail the ITC only that is reflecting into 2B. So from that period, it will be not applicable. This benefit is not applicable. So for the taxes period, for excess amount beyond restriction what has provided under Rule 36.4, even if I produce the certificate, I cannot avail the ITC. So we'll see with a small example. Let's say the same example what I discussed in the previous slide. So ITC as per 2A at the time of 9th October 2019 is 3 lakh, and ITC which is reflecting in 3B is 5 lakh, and maximum ITC I can avail is 60,000, and maximum eligible credit is 3,60,000. Even after those certificates, I cannot avail that 1,40,000. That is in excess of restriction provided under 36.4. So would you like to add anything, Ashika, here?
Yeah, like this is what the circular is saying. Circular is saying that this is what they are going to do based on Rule 36.4, which what Jagdish explained, different periods were having different cap, 20, 10 and 5. So government is saying that I will also follow that cap, and accordingly based on that cap, I will allow you the ITC. Now the thing is that is a rule. For every rule, there should be a backing in the act. Now the 16(2) which provide the backing in the act, has been introduced from 1st Jan 2022. Though Rule 36.4 is from 9 October 2009. Now the question which may arise in the mind of the people is whether without this backing, can rule through way of rule and through way of this circular, can ITC still be disallowed? Now the second thing, if it can still be disallowed, so what should we do now? And another thing, what about this excess avail? And for this additional cap, which has been provided by way of 20, 10, 5, what document should I produce? Like Jagdish explain it that we have to furnish our certificate for that limit or that non-matching or a transaction not appearing in GSTR 2A. That should be qua supplier if it is below 5 lakh. Now this 20%, the transaction which is not reflecting in GSTR 2A, which you are taking, now it depends whether you will do which way, how you should show it. Because this 60,000 may be considered of multiple, or now it is the SCC discretion, which party he will took for the 60,000 and for which he will furnish the detail. So as the certificate is qua supplier given in 183, accordingly, again, you have to, for this 60,000, you have to do your own, which supplier you will select. On that selection, you have to obtain the supplier certificate and submit it to the department. This is for 60K. Now, what about excess avail of 1,40,000? Because I have availed the ITC, I have the documents, I can show that I have made payment to my supplier. Now, one situation may be where my supplier is complied supplier. Means he has filed his GSTR1, he has also filed his GSTR3B. The only issue which has happened is instead of showing B2B, or it has been shown as B2C. One of this situation, there, even though this circular deny, but we are of the view that still it should be allowed. Only it after from 1st Jan 2022, when section 16(2) AA became operational, and when the 2B was made as a mandate to claim ITC, at that time only ITC can be disallowed due to non-reflection in GSTR 2B. Prior to that, it should not be disallowed and you should be allowed the ITC. But obviously, at first level, department will not agree. You have to dispute the same and take it forward. So this is all about it. Jagdish, over.
Yeah, okay. So now the clarification on warranty and replacement and repair. So this is the most debatable issue since the implementation of GST. So whether there is a confusion in the trade and industry that whether there is a liability to pay the GST on free warranty service to the customer, whether it is provided directly by the manufacturer to the customer or through the distributor. We'll see the circular has provided clarification based on various scenarios in case of warranty replacement and repair services. So now coming to the taxability and ITC on replacement. If a warranty service has been provided directly by the manufacturer to the customer, then it is not a supply. Therefore, no tax leviable for replacement and repair. And also, a circular has clarified that ITC is not required to be reversed. Why? Because at the time of original supply, original value of supply includes this likely cost of parts which are to be replaced during the warranty period will be included in the original value of the supply. That's why it is not an exempted supply. Therefore, manufacturer is not required to reverse the ITC. Next scenario is distributed to the customer. In case if one stock are purchased from the third party, that is, if distributor has provided warranty service to the customer out of his own stock, which is purchased from the third party, whether the tax leviable on supply to the customer, no, tax is not required to be paid because he is not charging any, he is not receiving any consideration from the customer. However, in turn, distributor will raise an invoice to the manufacturer. On that, he has to discharge the liability. And even in this case also, ITC is not required to be reversed, and manufacturer is allowed to take the ITC what the distributor is charged to the manufacturer. Now coming to the scenario 2, whereas stock is purchased from the manufacturer, whereas distributor has provided the warranty service, that replacement of parts to the customer out of the parts which he purchased from the manufacturer. In that case also, no tax is leviable on supply to the customer, and a customer will raise a credit note, and manufacturer will raise a credit note, and manufacturer can adjust his output tax liability provided the distributor is required to reverse the ITC. Now coming to the scenario 3, where he has provided the warranty services out of the manufacturer stock. In this case also, there is no tax is leviable on supply to the customer, and there is no supply from distributor to manufacturer. There is no requirement to pay the tax, and also as this is not an exempted supply, so reversal of ITC is also not required in this case. Now moving on to the next slide. So manufacturer to the customer. This issue we already discussed. Now distributor to manufacturer. So as I said, for the warranty service, in the previous slide, we discussed about the parts. This is about the service, whereas the service provided by distributor to the manufacturer. It is a supply of service, and the distributor will raise an invoice to the manufacturer. Manufacturer can take that credit, and distributor is required to pay the GST on that. And so whereas any additional consideration is charged from the customer, same will be taxable in both cases, either at the replacement or the repair. Coming to the extended warranty, where extended warranty has provided at the time of original supply. So it will be considered as a composite supply. The rate which is applicable to the principal supply, the same rate will be applicable to the warranty also. In case of warranty is provided after the original supply, at the time of expiring this warranty period, or after expiring of the extended warranty period. In that case, if there any warranty contract entered afterwards, then it will be considered as a separate supply, and GST is required to be discharged based upon the contract. It is payable by whom he entered the contract, that is either the manufacturer or the distributor. So this is all about the replacement warranty. Now coming to the refund. So circular has given the clarification on the calculation of adjusted total turnover. So rule 18.4 has provided the refund formula. We'll see what the refund formula. Turnover of zero rated supplies divided by adjusted total turnover into net ATC. We'll see what is the turnover of zero rated supplies and adjusted total turnover. Adjusted total turnover means total turnover in the state or union territory. That means the domestic turnover, and the turnover of zero rated supply of services. That is the supply of services, excluding that is the zero rated supply, that is the exports, excluding the value of exempt supplies. That means, in a nutshell, adjusted total turnover means total turnover as reduced by the exempted supplies. That is the adjusted total turnover. Now coming to the what is meant by a turnover of zero rated supplies of goods. So turnover of zero rated supply of goods made during the period subject to as per rule 89.4C, turnover of zero rated supplies should not exceed 1.5 times of the value of like kind of goods supplied domestically. So if I am export value 200, but in the domestic market its value is 100 rupees, then the maximum value I can consider for zero rated turnover is 150 rupees only. That is 100 into 1.5, 150. Maximum I can take the 150 rupees. So this is about the turnover. This is how we have to arrive at the time of filing the refund application. So what's the issue here is, what department is considering this and further explanation to rule 89 says that value of goods exported out of India shall be taken as lower of FOB value declared in the shipping bill, or the value declared in the tax value. Lower of this only should be considered for the purpose of the refund. So what department is considering is only they are considering this only for the numerator, that is for the turnover of the zero rated supplies, but not for the adjusted total turnover. Therefore, what it becoming, so the refund amount I'm getting refund amount will getting lower because of this wrong interpretation that considering. So we'll see this example so that you will understand it better. So here, let's say my tax invoice value, export value is 150, what I have declared in my invoice. Whereas FOB value, what I have declared in my shipping bill is 100 rupees. Assuming that I am not having any turnover domestically, that is the nil. So earlier, what department interpreted is that only the numerator should follow that explanation and rule 89.4C. So according to the department, my numerator, that is turnover of zero rated supplies, is 100, whereas adjusted total turnover. So adjusted total turnover means total turnover as reduced by exempted. In my case, there is no domestic turnover and exempted turnover. So my adjusted total turnover is export turnover only. But my zero rated turnover is considered based upon the value what I have declared in the invoice. So my adjusted total turnover is 150. So how much I am getting as a refund? 33 rupees. Whereas after the clarification by the circular, the maximum refund I am getting is for the both numerator and denominator, that is zero rated turnover and adjusted total turnover. The what method I have adopted to arrive the zero rated turnover, the same method I am adopting it to arrive the adjusted total turnover. So now I am getting the full refund of 50 rupees. So this is what they have given a clarity. This is the welcome move. So exporter will get benefit because of this clarification. So now coming to the non-compliance. Rule 96A has provided certain conditions which required to be fulfilled. Otherwise, the GST what we get as a refund should be paid back. In case in case of goods, it should be exported within the 3 months, whereas in service, realization has to be happened within the 1 year or the extended periods. If I not fulfilled both of these conditions, I need to pay back the GST what I get as a refund. So what the circular is said that even if you not fulfill these conditions what has been specified in the rule 96A, you can claim that amount as a refund what you have paid back because of non-fulfillment of these conditions, provided provided you need to fulfill the conditions. So you need to pay. Sorry, I lost here. You need to pay back along with the interest. Once you fulfill the conditions, you can claim back that as a refund. But you are not allowed to claim the interest as a refund. Only the amount which you have paid back because of non-fulfillment of condition, only that amount you can claim that as a refund. So circular has clarified that for this you need to file an application under excess payment of tax category. But as of now, this application is not there in the portal. So till then, you can file the refund application under any other category. So it specifically clarified that the interest what you have paid is not allowed to claim the refund. So would you like to add anything here, Ashika?
No.
Yeah, okay. Now coming to the GST 2B. Till now, the maximum refund amount is restricted to the ITC reflecting in a 2A. So with introduction of the section 16 subsection to clause AA, from 1st Jan 2022 onwards, refund amount is restricted to the reflecting in the GST 2B. Earlier it is linked to the GST 2A. Now it is linked to the GST 2B. So this will be applicable from 1st Jan 2022. Refunds which have already been sanctioned for that period will not be reopened. It is specifically clarified there. Now coming to the RFD 01 undertaking, this is just a procedural change. They have removed the section 42. Section 42 is about the matching concept. Now that section has omitted. So now they have removed that wordings, that section 42 from this undertaking. Only the procedural change. Now coming to the changes in the new rule 37A, which has been effective from 26/12/2022. What section 16 subsection to clause A is saying? The ITC I can avail only when it is reflecting in the GSTR 2B. So my supplier has filed GSTR 1 and it is reflecting in my GSTR 2B, but he has not filed the GSTR 3B. That time I am required to reverse the ITC if my supplier has not filed the his GST 3B on or before the 30th September of the following financial year. Let's say if he filed a I need to reverse the ITC on or before. In the second case, he has if not filed a GST rebate before 30th September, I need to reverse the ITC on or before the 30th November of the following financial year. That is in the October month return practically. So if I reverse my ITC after 30th November of the subsequent financial year, then I need to pay the interest at the rate of 18%. After September, or let's say after he has filed a 3B in the October or November, then I can re-eval the ITC. So we'll see how this needs to be, how this can be reported in a GST 3B. He has filed his GST 3B late, but he has filed his GST 3B on or before the 30th September. So in this case, I'm not required to reverse the ITC. So therefore, already I have taken the ITC in my 4FI, that is in the all other ITC section. So I need not to do anything. Whereas in the second case, we have not filed the 3B before 30th September. That is the next financial year. I need to reverse the ITC on or before the 30th November. That is in the temporary reversal. That is in the 4B2. I will reverse after in the December. Suppose let's say he has filed his GST 3B in the December month. I can re-eval the ITC. That means in the all other ITC column, that is in the 4FI, I will avail, and in the reclaimed ITC section, that is a 4D1 table, I will report that. So now the cross-sub versus IST. And this is again a debatable issue since the inception of GST. So there is a lot of confusion among the taxpayers when to adopt the cross-sub, when to follow the IST. So to bring the, so now the CBRC has provided the clarification how to when to do the cross-sub, when not to do the cross-sub and IST. We'll see scenario wise. When the head office had procured when the head office had procured the services from the third party in order to provide the services to the branch office, then head office has an option of both cross-sub and IST. He can either distribute ITC by way of the cross-sub or the input service distribution mechanism. And credit shopping is not allowed. That means there should be the actual supply in order to distribute the credit to the branch office. Otherwise, you cannot simply pass on the credit from the head office to branch office or branch office to the head office. That is what they have clarified in the circular. And whereas internally generated services, that means HR related services or any support services like that. In that case, even if the tax invoice is not issued, ITC is available. How? We'll see. Valuation in case of supply of goods or services between distinct or related person, Rule 88 will be applied. As per Rule 28, value of supply of goods or services shall be the open market value. So if the open market value is not available, and then the second will be value of supply of goods or services of like kind and quality. If the value is not determinable by about two methods, then it will be determined under Rule 30 or 31. So there is a proviso to this rule. As per the proviso 2 of Rule 28, when the recipient is eligible for full input tax credit, the value declared in the invoice shall be deemed to be the open market value. Whatever the value be declared in the invoice, that will be the deemed to be the open market value. So here I discussed. That is why even if we declare the nil value, in that case also, he is eligible to, head office is eligible to claim the full credit. There is no requirement to reverse the credit, because here the branch office, assuming that branch office is eligible to avail the full ITC. Now coming to the in the case of tax invoice credit not available, if the branch office is not eligible to take the full credit, in that case tax invoice has to be raised and open market value has to be followed. All the rules what have prescribed in the Rule 28 has to be followed. And circular has also clarified that the cost of salary of the employee is not mandatorily required to include in both cases. That is recently in the Colombo Asia hospitals, where the advanced ruling authority has held that the cost of the salary should be included while doing the process from the head office to the branch office. So that is why now they have given a clarity that cost of salary of the employee not required to not mandatorily required in the valuation. Now coming to the clarification on the TCS liability. So as per section 52 of the CGST Act, e-commerce operator is required to collect the
1 minute, Jagdish.
Yeah.
That cross charge versus ISD. So cross charge versus ISD, as these terms are used interchangeable. And people have doubt when it should be a cross charge and when it should be a ISD. As the government is aware, there is a confusion going on between the people, what need to be done or how it need to be done. They have come up with this circular. So what they have prescribed in this circular is, first they have divided into two parts. First, they are saying which is a third party cost. Means they are saying that the cost with the services or goods which is procured from the third party for the benefit of whole. For whole means maybe HO all branch or maybe for branch, but incurred by HO. And one will be intergenerated services, which Jagdish said, it's like admin costs, which are HO is doing for the branches. So that intergenerated services. Now what they said is, as there is an ambiguity between cross charge versus ISD, what need to be done, and SSCs are not sure how to proceed, even though they are talking about the past period, even though whatever manner you proceeded, you choose cross charge or ISD. If you have done, it's not a problem for them and they are allowing it. So for third party, there is no problem, whatever manner you choose. Either you have charged to your branches or you have distributed the credit, it's okay. But the only thing you need to be sure of it, what Jagdish pointed out, is credit shopping. What we mean by credit shopping is that you should not distribute the credit as per your will. That is, you are feeling that in this branch, I have higher tax liability. Let transfer from this HO, this much of credit which could not be utilized to this branch. This is not allowed. If they seize this, obviously they are going to question for it. Because if you will notice, most of the SSCs as of now, as we are standing in the month of July, September is the last day for issuance of show cause notice under section 73. And most of us have been selected for either audit, or we are received of ASMT 10, or we are received of investigation notices, where the most common issue we got the point or audit observation is cross charge. So for third party cost, they have given this clarification. So whichever manner you did, they are okay. They are not saying you should go with ISD or you should go with cross charge. But in GST Council, they have recommended that they are going to make ISD mandatory for this third party cost. So from future, even though they have recommended, it is not implemented. So for future, you have to start, if you have any such common cost, or if you are incurring from third party for the benefit of branch, then take your ISD registration and start complying with it. One. Now, intergenerated services, as a service which is internally generated. Now on that, they are saying that this concept will depend upon you, either your branch is eligible for 100% ITC, yes or no. Because as Jagdish took you through Rule 28, which talks about the valuation in case of related party or distinct person. Over here, we are concerned with distinct person. That is, under same pen, multiple GSTN. So in case of distinct person, they said that if your recipient branch or recipient unit is eligible for 100% ITC, they are fully eligible for ITC. It doesn't matter to me whatever you bill to him. Even if you have not billed, even though you have not raised any bill, not a problem. So you got a fighting ground now. Whoever, if have received a audit observation, any notice pointing out on this, because this is the most common observation which the audit officer made or investigation officer made. So if they have raised this, where they are asking you for internally generated services to raise from HO to branch, you can use this point if your branch or unit doesn't have any exempt supply. They are doing fully taxable supply. So they would be eligible for 100% ITC. So even though no invoice is raised, no tax is payable, no demand can be made by the officer. Now, where the ITC is not allowed, because it may be a case your branch may be having either taxable plus exempt or may be dealing in exempt supply. Then obviously you have to be billed for internally generated service. Now, another common issue which you will find whenever the audit officer comes is they see that because HO, so normally your admin cost will be, that person will be handling the account for all the branches. Sometimes it's happened you have centralized accounting, you might be having centralized HR. So for that salary, because that component is very high, most of the time officer asks you, go bill this. As you haven't billed, you are liable to pay tax, interest, and penalty. Now with this circular, they have said that this cost of salary is not required to be included. It's not mandatory because it is we all know that salary is specifically excluded from supply by Schedule 3, employer-employee relationship. Even though officer asks you to include this admin cost and build it to your branches. Now, by way of this circular, you can say that this cost of salary is not includable. Plus this clarification they have given in both means where you branch may be eligible for ITC or may not be. In both the cases, they are saying there is no need for inclusion, including this cost of salary. So it's a good circular, which is very helpful. Most of the circular which the 50th GST Council has come up with are in the nature to end dispute. Past litigation may be getting to some extent clear due to all this clarification. Jagdish, over to you.
Yeah. Yeah, now moving on to the TCS. So under section 52, e-commerce operator is responsible to collect the taxes from the e-commerce from the supplier and remit to the government. So in this, there is a confusion that in the case of ONDC, that is open network digital commerce. In that case, there will be the multiple e-commerce operator for the single transaction. In that case, which e-commerce operator is required to collect the taxes and pay to the government. So the circular has given a clarity that in the context ONDC, so where the supplier side e-commerce operator himself is not a supplier. In that case, supplier side e-commerce operator is required to comply with the section 52. That is, in case if the supplier supplier side e-commerce operator himself is the supplier of goods or services, like if Amazon, Apparel, so himself he the e-commerce operator and he the supplier also. Apparel retail owns by the Amazon. In that case, the buyer side e-commerce operator is required to comply with the section 52. That is, he required to collect the taxes from the buyer and remaining amount he has to pay, make the payment to the supplier. This is the clarification given by given with respect to the e-commerce operator. Coming to the other clarifications. So holding of shares of subsidiary company, whether it will tantamount to the supply holding of shares by holding of subsidiary company. It has been clarified that mere holding the securities of the subsidiary company cannot be called as a supply service, because if we see the yes, solely on the basis of SEC entry, that service provided by the holding companies, that is holding securities of companies and enterprises for the purpose of owning and controlling interest, supply cannot be concluded. Merely the entry is there in the classification. It cannot be said to be supply of the service by the holding company to the subsidiary company. Now coming to the e-invoicing. So where the registration is taken solely for the purpose of the TCS. In that case, whether the e-invoicing is required to be done or not. So the circular has given a clarification that yes, e-invoicing provisions is also applicable even for those registrations which are taken solely for the purpose of the TCS. This is the clarification with respect to the e-invoicing. As we all know that from 1st August 2023, invoicing is applicable. Turnover limit has reduced from 10 crore to 5 crore. So that is one update. So what to you, Ashika? Hello.
Yeah, Jagdish.
Yeah, what to you?
Share. I am just sharing the screen.
Yeah, okay.
I hope so. Screen is visible.
Yes, it's visible.
Okay. Now, with this clarification, now let us come to the amnesty scheme, which is once again has been extended by our government till 31st August 2023. So it is one more opportunity given to the SSC. So if there is any return which is not filed, either your GSTR 4, 99C or GSTR 10, take this opportunity and file your GSTR returns. And as with this GST return, you will be liable to pay late fee. So it's a good opportunity. Go ahead and file your GST returns by 31st August 2023. Plus, like as they have extended for this 3 returns, they have also extended for revocation of registration. As we are all aware, many of the GST registration has been cancelled due to non-filing of GSTR 1 and GSTR 3B. Now it's again an opportunity for them. Go ahead and file that as this option has been extended. Another is proceeding under 62. Proceeding under 62 is also an assessment of non-filer. Whoever have received the notice or order for non-filing, they can also go ahead and file off their returns. And as they file off their return, the proceeding under section 62 will be automatically concluded. So there is no need for further going to the officer and saying that as I have filed, or allow me to file or make any appeal, even if it is pending before the appeal, or even if you haven't filed the appeal, you have the option, use this opportunity and comply with it. Now, with this, there is very important judgment which we want to discuss. Now, as you will be aware, when we do our revocation, we have to file our GST returns. Now, as we are filing our GST return, what would happen to the transaction which has happened during the period of cancellation of registration till the revocation of registration? Obviously, nobody is going to stop their business. Transaction is going to happen. Purchase will be there, sale will be there. Now, as I have been given this opportunity and I am going to exercise it, now the question arises how you should proceed. Now for filing GST-1, it's okay, whatever supply I made, I will show it B2B, B2C in whatever manner it need to be shown, either export or it may be any exempted supply, I will file it. Now while filing GST 3B, my outward supply in table 3, I will show what is my taxable supply. This is my taxable supply on which I am liable to pay tax. Now coming to the point of table 4, which is my ITC. Now, input tax credit is subject to section 16 and 17. There are conditions specified therein. Like you should have the copy of invoice, you should make payment to your supplier should have paid taxes, your transaction should be reflecting in GSTR 2A or 2B as what Jagdish discussed in previous slide. Now, as your registration was cancelled, so obviously your supplier would not be able to show you as B2B. What they would be doing as B2C. Now you are going to ask that supplier to change it to amend it to B2B. But amendment is also with a time limit. So you have to make sure you take this initiative as soon as possible, because once the amendment could not be done, now the question arises whether you would be eligible for ITC. Another problem to it is time limit under section 64, which is as of now for 22-23 is 30th November, but prior to that it was 30th September. So you have to also check whether 16.4 compliance has been made or not, because this revocation will majorly suffer due to ITC. ITC availability will majorly suffer due to section 16.2 AA, non-reflection in GSTR 2B, and 16.4 time limit, that both you need to consider. Now, this is what has been considered in this High Court judgment. Now, I have linked with revocation, but there may be also a case of delay filing, where you have filed your return after the time limit allowed for ITC. But both are linked. Both deals with ITC and both deals with the subject time limit. So what has happened in this High Court judgment is, the question which was raised by the SSC is whether I can claim the ITC even though it is filed after 16.4. Why? Because what we were doing, what we were saying, as I am filing March 2020 return, so I am claiming my ITC also in March 2020 return, though I have filed on 27 November 2020. So what we used to say, it's a March 20 return only. ITC also claim in March. The only thing is I filed my delay return, that is after the time limit allowed. But it doesn't mean that it does not belong to March 20. It's avail in March 20, only return filing belated, so no ITC disallow, and section 16.4 should not be applicable. Now, what the decision of High Court? High Court is saying 5 points on it. First, that ITC is a concession, not right. Most of the time what we say, no, ITC is our right. So as soon as we incurred an expenditure, we pay the GST, I have the copy of invoice, I have made payment to my supplier, I am eligible for ITC. They are saying that's not the case. It's a concession which is allowed by the government. Second, they are saying that government also has the power to impose conditions like they impose under section 16.2 and 16.4. Another ground which we take to dispute is Article 14, 300A, where we say it's our right to business, right to do profession, right to equality, and that what we question. So over there, they are saying by imposing time limit, there is no violation of article. Fundamental rights which only come in question if there is partiality between the same group of person. There is no partiality they are doing. So there is no violation of fundamental right. We say, see, when I file my return late, you charge me late fee. You also ask me to pay interest. So I pay late fee and interest. So I'm making my bad return good. So High Court held no. By filing your late return, it doesn't mean that your return has got good and you would not be regarded as not filed after due date. Another thing we say is 16.2 is the major condition, where if 16.2 is comply, even though 16.4 is not comply, we should be allowed the benefit. High Court has said no, 16.2 and 16.4 both are independent. 16.1 is the main ITC eligibility. It says every registered person who is eligible and who has used it for the business purpose is eligible to claim ITC. So 16.1 is the eligibility criteria. 16.2, 16.3, 16.4 are all restriction and condition imposed on availment of ITC. And all of this, none of them override. Accordingly, you cannot say that as 16.2 is comply, even though 16.4 is not, you are duly eligible for ITC. So based on this, High Court has basically said that in this situations, in this illustration which is given, which is basically the fact of the case, that you won't be allowed ITC as it is claimed beyond the time limit prescribed under section 16.4. Now, the thing is that this is a AP High Court judgment, not Karnataka High Court judgment. And as we all know that it's all high court to high court. It's not that this high court has given this decision, all will follow this and accordingly will go. That is also not the case. Even though there may be a case that officer may rely on this and ask you to pay. But the thing is that, like as we discussed at the time of 2A versus 3B, those conditions plus time limit to avail IETC, even though it is given, it need to be considered that there may be a circumstance like COVID period was there. Most of the SSCs has filed belatedly. So by going on this cases, whether the IETC can be disallowed or not is a different question, though this still has been disputed. Until and unless Supreme Court judgment come, it cannot become a law of land. But we want to bring to your notice that this decision has come. So from moving onward, make sure you file your returns within due date, within the time limit only you claim the ITC in order to avoid this litigation. Now, another rate notification clarification it's about Good Transport Agency. As we know, GTA has been given two options and they have been given two rates. They can either go with forward charge, they can also go under reverse charge. Now under forward charge, they have 12%, 5%, 12% with ITC, 5% without ITC. And under RCM, the recipient pay tax under 5%. Now, why I just want to give the background before taking into the rate notification, the clarification which they have brought out. As we know that GTA who are going to offer forward charge, they are required to give declaration in Annexure 5. They have to specify that we are going to pay tax under forward charge and they have to file. Now it is available on portal. Earlier it was manually. So we have to give this declaration. Now what they have said, this declaration was required to be given by 15 March of the previous year for the subsequent year. Now this declaration has been done away. They are saying there is no need for declaration. Once you have opted, it will be deemed it is available from that period and it will continue until and unless revoked by you. Means once you have opted under forward charge, whichever the rate you choose, 12 or 5, once you opted, I will deem, even though you don't need to do every year one more declaration. One declaration, it's end. And once it is done, it will be continue. Now, if you want to shift from forward to RCM, then you have to file an Annexure 6 for revoking that forward charge and saying that now I am going to charge under RCM. Sorry, not charge. Now I'm going under RCM. My recipient is liable to pay tax. Now, in this, it is also important to note whenever a GTA is raising an invoice, they need to mandatory mention in the invoice at the end that I have opted for forward charge and I will be charging tax. They have to mention about the option they have chosen. If you remember Rule 46, there is a specific clause where it says whether tax is payable under RCM, yes or no. Similar way, even though mentioning, they have to also give this declaration in their every tax invoice which they are raising. Some rate changes they have done under goods and service. For goods, majorly the rate changes has done to regularize the prior period issues where the people were having doubts or where the classification are more or less same. So now all this rate of 4 goods, they have reduced to 5%. And in case of service, satellite launch service has been exempted and service provided by pigmentation has been exempted, had been made taxable from exempted. So if anybody is having a warehouse of agriculture produce, so by way of fumigation, if it is provided, now it is taxable. So now your supplier need to charge tax. This is a compensation cess for sport utility vehicles. Now compensation cess has been imposed. So it has become costlier. Another is a pan masala tobacco and product. Now for them, they have come up with ad valorem rates. As we were aware that earlier during pre-GST regime, there was a capacity-based taxation was there for this type of industry, which has been done away due to coming into a GST. Now they are planning, recommendation has also been made. They are going to introduce that capacity-based taxation. Plus, they have also imposed cess, and cess will depend upon whether it is as per whether they are required to prescribe retail sale price or not. On both the cases, cess has been prescribed. These are other recommendation. Now, this recommendation is pending for clarification. Still now, they haven't come up what they are going to do or how it is going to go forward. But the gist they have provided is very important. One of the thing is taxability of gaming. Now, casino, horse racing, online gaming. There was a dispute. What about game of chance versus game of skill? As of now, taxability was only on game of skill. For game of chance, it was considered as actionable claim and no GST was imposed. Now, by seeing the large revenue involved in this industry, now government is planning to impose tax on it. And in recommendation, they have also said that 28% of rate will be applicable, though still not notified. And for the value, they are saying is the value which you are putting in, means it's the bet. It's the amount of cheap purchase at the casinos. So the value earlier, what was it? That whatever the fee which is charged by the person online as a for providing the platform fee or whatever commission they charge, earlier GST was livable on the same, not the amount contributed by you. That is 100 rupees if you are contributed to it for the purpose of playing. On that, no GST was chargeable. Only the 10 rupees or 5 rupees which they are charging as their charges, GST was applicable. Now they are saying on that 100 rupees full, GST will be applicable. Then the issue which were long from pre-GST regime, RCM on director service. As there was lot of dispute was happening whether director service provided in the capacity of director only will be come under RCM, or other services which is provided by the director will also come. Now they have clarified the service which is provided in private or personal capacity by the director will not be taxable under RCM. So it is only in the capacity of the director which will come under RCM. Though it is in recommendation, till circular has not come. Another important clarification which we are going to brought in is cinema hall. Now, when you go to cinema hall, we purchase popcorn and all. Now, it may be purchased online also at the time of purchase of tickets, and it may be after you visited that premises, you purchase there at the break time. So what they are saying, now if you are purchasing with the ticket, it will be composite supply and it will be taxable at the rate of ticket. And when you are purchasing individually at the premises of cinema hall, then it will be considered as an individual separate supply as a restaurant service and GST at the rate of 5%. So this is going to have a huge impact on cinema hall costing. Then e-way bill. They are planning to introduce e-way bill also for gold and precious stone. Till now, it was outside. Now, for movement of gold and precious stone also, e-way will be applicable. The state have been given power. They will be specifying what would be the threshold limit, what e-way bill, how it need to be raised. They have given power to state. Tran 1 and Tran 2. As you all will be aware that by way of Supreme Court judgment, Tran 1 and Tran 2 was again open and people were allowed to file their Tran 1 and Tran 2 again till November, last November 22. Now, as they have filed, obviously department is going to review those filing. They are going to raise the question whether the Tran 1, Tran 2 availed by them is eligible or not, it's properly filed or not. Due to that, dispute is going to pass, order is going to pass, people are going to file an appeal. So as in online portal and in the act and rule, there is no mechanism has been provided how this appeal can be filed. So till that time mechanism is not provided online, they are saying manual filing of appeal can be done. E-commerce operator, now online transaction which we are doing in Zomato, Swiggy and all. So they were required to prescribe the recipient name and address. Now they are little bit lenient in that way, and they are saying you just write name and state, it will be okay. Now supply of goods to unregistered, they are going, in case of supply of good, they are going to prescribe what should be the place of supply. Like as we discussed for tobacco and pan masala and other similar item, that as there was a capacity based taxation prior to GST, same they are planning to introduce over here also. So they have also said that they will prescribe what will be the special procedure for the purpose of their registration and return filing. They are also coming with the penalty provision for the machines. If they have a machines, they have to register them. If they don't register, what will be the penalty? And for export, they can made only with payment of IGST. There cannot be export without payment of ITC. So for all this, they are going to do the changes. GSTR 99C as 22-23 got completed. Now GSTR 99C need to be filed. Due date will be most probably December 23, like all other years. And for 99C, the turnover limit is again same, like for 21-22, 2 crores and 5 crore. If you're above 2 crore, GSTR 9, above 5 crore, 999C both. Relaxation in table, they have continued the same, which was earlier for 21-22, same as they are continuing for 22-23 also. But still, they haven't come with notification and particular circular for this. Another important thing is what they have recommended is DRC form. DRC form is demand recovery form. Now you need to be careful for this. Why? Because we are filing our GSTR1, we are filing our GSTR3B. Most of you must be receiving ASMT 10 notice, and some of you must have received DRC 01B notice, where they are specifying about 2A versus 3B, 1 versus 3B differences and asking you to clarify. Now for this only, they have specified different form, DRC 01B, which is 1 versus 3B. Now they have come with another form is DRC 01C, which is 3B versus 2B. So any discrepancy is there, they will issue you the notice, and notice is online available. That has got active in the portal. So you will start receiving those notice. And the biggest important thing is, if you don't reply to those notice, you won't be able to file GSTR 1 and 3B. They have provided a 7-day window to reply to these notices. And if you don't reply, they are going to block your GSTR 1 and 3B filing. But as soon as you replied, that will become unblocked and you can go ahead and file your GST returns. So you will furnish your reply. The reply need to be submitted in part B. Part A, they will issue notice. Part A of DRC 01B, part A of DRC 01C, they will issue notice. And in part B, you have to reply. If they are satisfied, it's okay. If they are not satisfied, then we'll go ahead with the recovery. And for that, they have prescribed form DRC 01D as a form for the purpose of recovery. So now you all need to be very much careful while filing your GST return. Any discrepancy, any red mark, any red flag in the system of the officer will result into a recovery proceeding or may result into a recovery proceeding. So whatever figures, whatever details you furnish in returns, make sure it is in reconciliation with each other. Even if reconciliation may not happen due to some clerical mistakes, make a proper record of it so that when the notice comes with proper clarification, explanation, and documentation, you can submit your reply and make sure no recovery happens. Another thing is GSTR 3A notices. Now GSTR 3A's notice is basically they are issuing for 1 and 3B. Wherever you haven't filed your GST return, they are going to issue your GSTR 3A asking you to file this return. This 3A you can find if you will go in your user services and notices. due notices. You will file multiple GSTR 3A notices if you are the person who are not filing a GST return within due dates. So multiple GSTR notices you can see in your portal. Now they are preparing that notice should also be issued for GSTR 9 and 9A. Now 9 is annual return. 9A is also annual return, but it is for composite dealer. But if I say you 9A is still not active, it is the GSTR 4 annual return which we are filing. There is no option for composition. Even if I go today, there is no GSTR 9A to file. But over here, they have included. Now GSTR 5A, ODR suppliers have to file their GST return in GSTR 5A, which they are going to amend if they are providing to registered person to furnish the detail. This is only for the purpose of disclosure, just to track RCM liabilities. Now, these are other recommendations for GST rates. I will not go into the depth. Will cover only the ones which are relevant. So anyhow, PPT will be shared for all of you, so you all can go through it. Now, another amendment which they are going to brought in rules. This is very important. Now, most of us have furnished one bank account in our GST registration, because while filing our GST registration is important to furnish that detail. Otherwise, they will not sanction me a RC copy. And I have been given 40-day window. If I haven't furnished that bank account, I can update there. So now they are saying you have to furnish your bank account detail or update in GST registration copy. If you don't submit, then they will suspend your GSTN, they can revoke your GSTN, they can block your filing of GSTR1. So any of you, if you haven't updated your bank account detail, go and update. Physical verification will happen when Aadhaar authentication is not done, or where they file, it's a doubtful. This all things which the amendment they are doing into, it's basically to curb and check the fake registration, so that they can know who are just taking registration for the purpose of doing circular trading or issuing bogus invoice. Biometric Aadhaar authentication, as they said for Gujarat, now they are planning to do it for Pondicherry. Pondicherry. This is recommendation, still not notified, but supply of good from duty-free shop, as it is exempted, so it should be also considered for Rule 42-43 reversal. There will be obviously sharing of information. For that, they will create account aggregators from which all the information of GST portal will be shared to different divisions. Compounding of offense, as in GST Act, compounding of offenses provide, but what should be the amount and quantification? For that, they are going to insert the rule. Now, this all is in relation to curb the fake invoicing, to make sure that there should not be any bogus registration. So various measures they are planning, so that, like as we read in rule, they are making sure bank account is attached. Registration, they are making sure that physical verification is taken place wherever there is doubt. Even if you notice, if you have one registration and it got suspended, cancelled, whatever may be the reason, and you go for second, they will not give you second registration easily, because they have to ensure that what is the reason for your first registration surrender. It may be either by you or it may be by the officer, but what would be the reason they need to identify. GST tribunal. Now, as in Finance Act, in Finance Bill they have, and Finance Act they have introduced about the formation of GST appellate tribunal, and they have also changed the pattern where it's going to come, how it's going to come. Now it has become a principal bench. Earlier it was national bench or regional bench. Now it has become principal bench and state bench. So GST tribunal is about to be launched, but it will be launched in phased manner. These issues are pending. This has not been recommended, but they are going to discuss, is about inverted duty structure in textile sector. And two-factor authentication, you must have heard in GST portal and e-waybill portal, they are saying that two-factor authentication has become active, but still now it's not mandatory. So they are planning to make it mandatory. Time limit for generation of e-invoice. Recently, some days back, you must have written that e-invoice is going to be make and blocking that it can be generated only for 7 days. After 7 days, it can't be. But that was afterward, that was removed now, but it is in discussion. Most probably it will come in some few days. And capacity-based taxes for certain sector, as I already discussed, for tobacco and pan masala is also in the discussion. So if you have any questions, we can go ahead with it. There is one query, ASMT 10 issue for e-waybill versus 3B tax liability. Do we need to respond it? Yes, you need to respond. See, whatever may be the notice issue, it is always recommended to reply. It's not the case that you should not reply, you should keep on hold. Because if you don't reply, that non-reply can result into audit, investigation, or direct issue of show cause notice. So it's better every time to reply. Now, as you are saying, e-waybill versus 3B, if there is a notice, do your reconciliation and you can submit your reply. If you haven't been received any support for e-waybill or 3B, how the figures have been derived, the first reply, preliminary reply you can do is provide me the documentation or supporting on basis of which this ASMT 10 has been issued in order to reply. So you can seek information from the officer and then you can go ahead with reply. Is e-invoice applicable?
One moment, Ashika. So one point which I would like to add here, there's always a doubt whether the ASMT 10, should it be restricted to whatever the information. Basically, if you see section 61, it says the proper officer may scrutinize the written and the related particulars furnished by the taxpayer. Now, in order to verify the correctness of the written and the information furnished. That's what your section 61 says. But when you go to the rules gives the power for the officer to verify the information which is there with him, which is beyond the returns. See, eventually, if I have to compare any information between the information, like I furnish GSTR1 and GSTR3B, if I try to compare both, the scope of the officer is less. While if you see that when it comes to furnishing of the information, which is the information available with him, what is the information available with him? He has like access to the company MCA website, the audited financials, or access to his own data, which is e-waybill. So he can ask that, in my view, he can still ask the question of the turnover that is relating to e-waybill and the turnover that is being reflected in the GSTR1. However, the couple of points that you can consider here is the ASMT 10 could be cryptic, saying that the turnover in e-waybill is so much. You may counter it back asking that, okay, I would like to know more information about the values of e-waybills that you have taken, because in your e-waybill portal, there is no report for you to download and see. Sometimes there you should always presume that, okay, the error can happen anywhere. Never believe that any numbers that are coming, they are sacrosanct. So you can always question back saying that, okay, I want to know the details basis which you have furnished. The GSTR1 is with you. You can cross verify the value which is there in R1 and ASMT 10. 3B is there with you. You can cross verify the values. What is not there with you is the information of e-waybill, which readily not available. Do I need to download the e-waybills and keep? Not necessary. The chances that the e-waybill notice could have been taken, the delivery challan movement which happened from the warehouse to the warehouse. It might also happen the delivery challan, sorry, the e-waybills I have raised for all inward purchases which I have done from the unregistered dealers. So if the system is purely taking all the e-waybills generated by me, it could be an error. Or there is a time difference between the date of raising of invoice and the date of movement of goods. I have raised the invoice on 25th of the March, but I have generated the e-waybill on 5th of April. So there could be many reasons that might occur. So it's always required that you should reconcile this. And as Ashika rightly mentioned, that any notice that is coming, you got to respond to it. If you don't respond, then the officer has a power to do the assessment. And from 61, straight the matter can be referred to an officer for 65 to do a detailed audit. Or if the officer is convinced that this is the liability, he may issue a notice either under 73 or 74 asking to pay the taxes. And any demand that is coming, and if you are not attending, it will get into another issue. So the answer, I would say that you definitely got to attend to all the notices. Second, use a software. Do not rely upon the pivot tables or VLOOKUPs. Use a software which can always be a custodian of the data, and you should be able to handle it. Yes, Ashika, you can take the next question.
Is e-invoice applicable to SEZ? Yes, e-invoice is required whenever supply is made to registered person.
Okay, here the only addition which I want to do is, if you are making a supply to an SEZ, e-invoice is required. E-invoice exemption is given if you are an SEZ. If you are an SEZ unit, SEZ units are exempt from the provisions of the e-invoice. So they don't need to generate an e-invoice. Please note, the provision is given only to an SEZ unit. If you're an SEZ developer, again, the exemption of e-invoice is not applicable. So supply by SEZ, e-invoice not applicable. Supply to an SEZ, e-invoice is applicable.
So next question is, for e-way bill purpose, what value need to be adopted by job worker when he return the material to parent company?
Yeah, so Aisha, this is a question which has been bothering many. The point first that comes is the e-way bill is required only for the goods and not services. Let's take a simple example that, okay, I am supplying, I'm Raymond's and I'm giving a cloth to, let's say, a tailor, and his job is to stitch. 1 lakh is the material of the cloth, and his stitching charges is say 10,000 rupees. And when he is returning back, should the e-way bill be required? The plain answer to it is, if the job worker is registered and he is returning back the material, his invoice is carrying an SSC code or a HSN chapter 99. E-way bill cannot be generated where the underlying items is not goods. So you cannot generate an e-way bill with a HSN 99. That doesn't mean that I am not saying that the e-way bill is not required. In this situation also, when the job worker, the tailor is returning back the goods, e-way bill is required. Here, the e-way bill shall be raised under a delivery challan by the job worker and which is moving back. The question that comes is, what should be the products, what should be the value? When I have sent the cloth, I would have sent in meters. When I have sent the cloth, I have sent it in meters saying some 100 meters and the value has become 1 lakh. But when the material is coming back, the meters got converted into shirts and number of pieces. So the e-way bill has to be raised with the HSN of the shirt and not the HSN of the cloth. Point number 2, e-way bill has to be raised with the value add. The original value was 1 lakh and the return is coming with the 10,000. It is 1 lakh 10,000 rupees. That's the value which the job worker has added. How will the job worker know what is the principal value and how does he add? When the material was sent, so the copy of the e-way bill has and the description and the material and the value is there. So job worker has to write the product, the shirts as 1 lakh. And after adding 1 HSN with the goods, e-way bill portal will permit you to add the additional HSNs which are of service nature, which you can add the 10,000 value and raise an e-way bill. Hope this clarifies the question. So Aisha is asking, how do we know the value of the HSN for the finished goods? The value, I'm again saying, the shirts value is continuing to be 1 lakh and my service charges is 10,000 rupees. So I am going to raise 2 line items in the e-way bill. I'm raising 2 line items in the e-way bill. The original value of the shirts that has come, which is there in the e-way bill, and my job work charges. Now it's a different story that these Raymonds might sell the same tool 1 lakh worth shirt for 3 lakh. That doesn't mean that the e-way value will be 3 lakhs. When the material is moving from my side, I got it for 1 lakh and I did a job work of 10,000 rupees and I'm sending it back. Hope this is clear. Yeah. PSMI, whether an SEZ unit can take ITC. This is again not a straightforward answer. It is a litigative question and an answer. The point is when someone who is making a supply to an SEZ, it's a zero rated supply, which means the supplier is not levying the taxes. He has a right to, please note, he has a right to make the payment of taxes and collect it as a refund from the government. I'm only saying make the payment of taxes. I'm not saying that he has a right to collect from SEZ. However, owing to various provisions, the supplier may say that, hey, look, my proper officer is saying that this is not for authorized services, or he is saying that this is not a zero rated supply, or the officer is asking for an endorsement which SEZ unit is unable to give me for various reasons. The supplier is now saying that I am going to charge. Now, I definitely can't deal with the department and don't, it's not now not my lookout to say that, okay, I will not be able to, I'll be able to do a zero rated supply. In such a scenarios, when the supply is happening, in such a scenario where the supply is happening with the tax and the SEZ is making the payment of such tax to the supplier in the DTA unit, such SEZ can avail input tax credit of this. Now, can they claim this as a refund? In my view, this can be claimed as a refund because SEZ is eventually doing most of the things as export of goods or services. So the benefits of section 16 of the IGST Act, which is there, is applicable to SEZ also, and hence they can make a claim of refund under section 54 of the CGST Act. Any other questions that which has been covered? Okay, some of the points I would like to bring again back to the highlight, whichever beautifully discussed by Ashika and Jagdish. Again, everything are for litigation. There's nothing we can say that, okay, these are free from the various things. I will never say anything is free from litigation. Everything has its own cost. But I want to put up some of the points for your thought to look at as to how the taxation should be looked, both from the clarifications that has come up. First and foremost, where the question that the point of circular 192, where Jagdish has explained about interest on wrong utilization, where I have utilized IGST, but the value of CGST, SGST was there. And there is no balance in this ledger, but the balance is there in other ledgers. The point that where Ashika was also saying that can this logic be extended, when this benefit can be extended in case of CGST as IGST, CGST, and for SGST as IGST, SGST. Though this is an academic theory, because till 49.5 was amended, the IGST balance could have been left and I could have utilized the other balance. So till that point, this theoretically would be applicable. The post amendment of 49.5, this issue will not come, because portal forces you to utilize the IGST balance before utilizing CGST or SGST, which means theoretically today you will not face this issue. But was this issue there earlier? The answer is yes. Can I logically apply this? In my view, answer is yes. The second question which people have been asking is, should I do this computation as a overdraft? Should I do this computation like how an overdraft bank account interest working happens? What does that mean? If you notice, let's say if I have taken a loan of 1 crore rupees, now the days on which the balance has become credit balance, I will be charged. I will never be charged for 1 crore full month. The days on which I have overdrawn from 0 rupees to 1 crore, there would be some normal rate of tax, over and above some penal rate of tax, but it is charged based on the rate applicable in that slab. Now, can this be treated? Can this be treated in that way? Now, my answer to it is a clear no. In fact, if you look at the rules, rule clearly says the computation of interest. The second clause, it says the date on which the balance is falling. The date on which the balance is falling, which means if the date on which the balance is falling. So if you see rule 88B, clause 2B, on the date on which 2A, on the date on which it is falling, it falls below the limit. That means once it has fallen the limit, it means you have utilized the credit and you cannot carry forward. I'll give you a simple example. Let's say I have availed an input tax credit of 10 lakhs. I realize that it is an ineligible credit, but I found 11 lakhs already available in my electronic input tax credit, electronic credit ledger. Next month, I need not pay the any interest, because already, though I have used availed, I have not utilized. The balance is existing. Month later, the balance came down to 8 lakhs. A month later, balance came down to 8 lakhs, which means I have utilized 2 lakhs from the 10 lakhs availment. A month after that, the balance went back to 15 lakhs. The question that comes is 2 years later, and I will presume that that 15 lakhs has been continuing for another 2 years. 2 years later, when the audit and assessment is happening, can I make a plea saying that, look, it was continuously 15 lakhs in excess of the 10 lakhs. So please do not levy the interest. Only 1 month it fell down, levy the interest only for that 1 month. In my view, it is not possible, because the way the wording which is there in rule 88B, it doesn't permit. So this is one point definitely I want you to pay attention to. Then another clarification which has been given about the introduction, basically the extension of the benefit of circular 183, which is carried to 193. There again, from 16(4) perspective, Ashika touched about the provisions in case of revocation. The question, the mute question that comes is, still in many judgments, 36 sub-rule 4 is constitutional validity of that has been questioned. I am not advising saying that this is the right way, but if you have availed an input tax credit, please note, if you have availed an input tax credit and such credit is genuinely backed with all the provisions of 16 subsection 2. I have purchased invoice, I have material received, I have made the payment. Only thing which is there is GST or one supplier, I don't know where is, I have made the payment, everything is, I can establish. Supplier says, hey, I have made the payment, he gave me a declaration. Now coming this rule 36 sub rule 4 is saying that, okay, you take, installments. Visible credit plus 20%, 10%, 5%. If you are well within that limit, you are free. No question. If all the notices that you have received till date, either ADT notice, ADT observations, and which got converted into 73 or 74 notice, and it would have reached a demand. Generally, my always advice to the clients is, if you find your case, if your case has merits, please contest it. Please contest it. Even though Act rules is not supporting you, if you find your case is merit, the officer is hell-bent, adamant, and not willing to listen to your plea, contest it, fight for it. You will get this clarification circulars. So, if you are well within this new circular that has come, well and good. If you think that this limit which is there, which is given in the circular, is not sufficient, but your purchase, everything is genuine, I am of the view that you can still fight for your case, because 16 subsection 2 clause AAA got introduced only on 1st January 22. It is effective from that date. only from that date, in my view, the condition to restrict the quantum of credit will come in. Till that point, if the other conditions are met, the credit that can be claimed can still be fought for it, is my view. With a due respect to the findings of the judge in Tirumalakonda Plywoods, where the input tax credit is not a right, it is a conditional right. I am of also the view that it is a conditional right. It has to be fulfilled some conditions. The conditions mentioned in section 16, which I have fulfilled. So till 1st January 22, I am of the view you can still fight for your case, even though if your limit is above, subject to other points that have been mentioned in this circular. Now, certain other clarifications which was on warranty repairs, they are pretty simple, but one point on ISD is something where Jagdish was mentioning about the beneficial circular, that if you have not made a cross charge nor an ISD, so far it is clear and it is good. I would only want to say that you cannot extend these provisions which are given in ISD for a cross-border transaction. If I have a branch office in another country and head office is here, I cannot apply this circular saying that I have not done the cross charge, it is okay. Only employee transactions also, it is not okay. This one point you have to see. The another point, this being a beneficial circular, you can fight. I have seen many notices where the proper officer is saying that, hey, your head office is in, let's say, Bombay or Delhi, your branch office is here. They have not done a cross charge of it. If they have done a cross charge of it, there was a consumption which was happening in the state of Karnataka. So there would have been a tax benefit that would have been received. So there I have been seeing notices coming up even in that style of the thing. I think this council meeting was more to do ensuring that how do I end the litigations. See, there are two types of litigations, if I have to say. One, there is a violation which is beyond the law. Second, it is interpretation of the law. And maybe the pressure of the revenue targets, collections, whatever, every officer, I don't find them as an administrative officers. These days, I find the officers are not administering the law, but they are also become like a sales agents and someone of the government. Their only motto is, where will I find revenue? I think the preamble, the context, the objective of the officers is not to harass and create the revenues. The preamble, the context is, that's an administrative body. They got to see whether the law is implemented in a uniform way. I think the taxpayers' grievance should be more active, and the taxpayers should also be vocal whenever there is something happening not right. They should fight for a cause rather than fumbling and settling to unauthorized means to settle the matters. So be careful on the notices which are on ISD and other aspects. One other point which I want to touch upon, which is on casinos, though not implemented. And though 90% of you who are here have a direct connection on bearing either as a buyer or a seller. But a point which you have to be mindful is the department is now looking at taxing the different avenues, different ways of taxing it. Look at the indirect impact that can come up. Is this online gaming is like a very vast definition. And in fact, the next council meeting is likely to be held in a week's time. 51st council meeting. I think this is going to happen in a VC, but the focus is exclusively to discuss on the same subject. The point here is there are a lot of corporate games, the websites which are doing conducting of the games for the corporate, which provide only a platform fees. They provide a platform for doing a corporate events. Now, the definitions have to be very carefully, someone has to look at, and they have to see whether it is applicable. You know, entertainment is different from amusement, right? So, it's like in case of an entertainment things, That's a platform. I should find an entertainment. In case of an amusement, there's an activity happening and which gives me the entertainment. So you got to differentiate these portals. Now, why am I saying that? The interpretations are going to come in a big way. Some of the rate changes which has been discussed by Ashika also have these interpretational issues. If I have to take one simple example of SUV where it has been mentioned that, okay, now the SUVs are going to be charged at this rate. Please note, if SUVs are charged at the additional rate which is cess, that comes up is what is that MUV, SUV? Now, industry has their own definition, hatchback, if the boot capacity is so much. Today they are looking at with ladder, without ladder, the size. This segment has been a deer. So whomsoever are dealing with any provision in the law, and if you have slightest of the doubt, if I ignore this and I'll take you the easy example which Ashika mentioned about is the multiplex, food which is charged in the multiplex. If it is charged along with the invoice, in the invoice or separately. Now, what are these three different meaning? For example, it is 300 rupees popcorn free vis-a-vis 250 rupees ticket, 50 rupees popcorn vis-a-vis 50 rupees paid in the the canteen or the stall inside the multiplex. The tax rates change, the HSN change. Now, contracts determine the taxation. Contracts determine taxation. Does GST law permit for people to lift the corporate wheel and tax the transaction? Answer is no. GST law cannot and will not say that, no, I will not agree that, okay, you bundled this and you are giving it, so I will bifurcate and tax it. For example, you are selling the car, no, I will say you are selling engine, you are selling tires, you are selling seat. So for leather sofa, this is the rate, for engine, this is the rate, for tires, this is the rate. Can they do that? I cannot never do it. Whatever is the contract is a contract. But how do we test the contract is real? To test the contract is real, the points which are there in the contract also has to be explored. The points that exist in the contract also has to be examined to say that yes, the contract is real. Little deviating from the topic, if I have to give you a simple example of renting, in fact, this is another case that we have noticed, is if I have to say renting of a coffee vending machine. The question that comes is what should be the rate of tax that needs to be charged? Renting of any goods, whatever is the rate applicable to the goods is the rate of tax. It's not 18%. Next, along with the renting of it, if I am only supplying milk, sugar, and the necessary ingredients like coffee beans, am I an outdoor caterer doing that activity? Again, the answer is no, because the contract is supply of machine and supply of goods separately. Now, how do I know? But both the things are being supplied by me. If the contract is free to say that this renting can be cancelled at any given point of time, if the contract also is free that the lessee or the user of the machine can buy milk, sugar from anyone. So these ingredients that have been written in the contract also have to be tested to say that the taxation has to be read in the same way or not. So it's very important that every contract that you are drafting, you got to vet it through a tax expert. Every notice that you are replying, have a second opinion. Instead of you doing a reply by yourself, just get an opinion from the consultant. Say, look, this is how I intend to reply to it. Is there any point that I need to add? Is it worth fighting for this? Have those conversations and before you take any call on it. I think these are the points which I would like to bring to the discussion, but a pretty good job done by both Ashika and Jagdish in covering all the aspects. I'm not talking on the capacity-based taxation, which is more likely to come. And once the capacity-based taxation comes, we are moving away from the principle of destination-based tax, including if the rules come for taxation for an unregistered dealer, which means we are complicating the subject much more than the original GST in which it brought in is not there. That is where the consensus of the states have not come for the capacity-based taxation. Generally, in a capacity-based taxation, whichever the state the installation has happened, the collection is going to happen there. But otherwise, it should have been the state which has consumed the goods should have got the revenue. And they also found a mechanism wherein in the capacity-based transaction, they will do a one-time charge of based on the capacity, permit them to discharge the liability basis the GST R1. So only that delta, if any, goes to the state where it is. I think we should wait for the specific monthly reports and other reports which they are looking at it to come look into detail of it. Yeah, there's one question which again came to me is please share the PPT. To all the registered participants, you'll get the copy of this presentation. So any questions before we move to the part 2 of the subject? Ashika and Jagdish, is there anything that you think we need to add?
So one more question is there's a differential tax paid on bill of entry. Can I claim ITC on tax paid?
Yeah, so you want to take up?
Maybe because of assessment that value got differs. Whatever the amount we paid as an IGST, we can claim the ITC on that.
Right. So again, the point which I want to add is if you look at the conditions given under Rule 36 for claiming of input tax credit, see the condition that is given in Rule 36, or if I have to say 2B and 36(4), this can also add to a question people who ask that, okay, my import of goods or courier bill of entry not visible in 2B. To answer all these questions, for claiming credit on import of goods, bill of entry is the document. 36(1) says it's the list of the documents, that is the document. There is no condition in 36(4) when it comes to the other than forward charge credit. Hence, the differential tax you are paying. Let's say while doing importing the goods, I have assessed the IGST at 5%. Later, customs says, no, it's not 5%, it is 12%. And please note, I'm talking that this payment happening after 2 years. Let's say import happened 2 years back at 5%. And now it is assessed, the differential 7% is being paid after 2 years. There's no fresh imports happening. Can I claim the input tax credit of it? In my view, absolutely yes, you can claim the input tax credit of it. Any other question? All right. So let's move on to the next part of the discussion, where today we want to discuss about the technology aspect. In fact, I strongly believe that we finance professionals always should be techno experts, and definitely one has to be much experienced about reporting and automation. There's a world of fintech. We call this as fintech and world of fintech. How do we execute that? How do we go about do that? So to answer that, we are going to discuss in today's discussion 2 aspects. Python, which is a programming language, very powerful, which is being present in today's world, has been, though which is open source, now it has been integrated with Excel. So you can add the Python and the library. You can just install the Python libraries and in the Excel, you can start executing some commands. Today, we are going to demonstrate one small feature like, can I write an SQL script? Can I write an SQL script in Excel? That's the first thing which we do. Second, we've been hearing ChatGPT. It is going to ask me many questions. If is like, I want to prepare an affidavit. So let's say I want to be I want to be an authorized person for a so-and-so person. I want an affidavit. Can you just draft me an affidavit, put it on ChatGPT, you get an affidavit, you can do. Now, with this kind of technology and power that is there, we are going to see how we can use that in our day-to-day life. So I invite the second session speaker, Tarun, to walk us through how to use and how do we use ChatGPT and write some queries. As he is taking us through the session, wherever I feel that to add something, I'll pitch in. Taran, over to you.
Good evening, sir. Hello, sir.
Yes.
Okay, sir. Sir, first of all, we will discuss about how to write a queries in Excel, sir.
Okay.
So for that I took a sample data file.
You have to share your screen, Taran.
Okay, sir. Once, please. Yes, sir. Sir, okay, sir.
Yeah, the screen is visible.
Okay, sir. So I took a sample file for writing a SQL query, sir. I have written already these queries with example tables. So we will now we will take a sample query to get this data from SQL queries. For example, we will take books column table. In that, we need to know how many books are present in a German language or English language. So for that, we will write a small query. It is a select ID. It's a small query. We just copy and paste in. Here it is. So when we paste it, it will show us a result. In German language, there is a Python, subscribe, and my first book. So these are three books are present in German language. Here we can see that, sir, Python, subscribe, and my first book. These are three books are present in German language. Likewise, we can take in two columns like books and editors. Editors who wrote the books. Editors and authors also, sir. For that, we will take another query. We will select this query, sir. So we will just copy and paste it, sir. So it will get error, sir, because okay. So we have to select two tables, sir. One is books and authors table, sir. We will select first table. And so like this, we can get data from SQL queries, sir.
Yeah. So before you complete and move to the next thing, I will walk them through the same thing again, because for us again, this is something little alien. This cannot. We don't understand SQL. We have not been from the background of SQL. So in the Google, you can easily type what is SQL. You can always type like what does the data which is coming from SQL is always important. Now, why I say SQL? SQL is a very structured query language. Second, SQL has more power. Now, if whatever, Tarun, can you go to the first piece which you have shown?
This one.
1 second, let me just take control of the screen. Let me just walk the thing to the participants. Let me just. So, in the interest of it, I'm just freezing. Yeah. Okay. Now, whatever which Tarun has shown an SQL query, this can also be done with a filter. No, he said select ID and title from where language is equal to German. This is the language. If it is German, I can get it. You can say that, hey, look, what is the big deal in it? I can apply a filter. Sorry, let me just. So I can apply a filter and I will get this. I am selecting German and say I got the result, whatever I want, right? So this is something which is common, we can say. Now look at the power of it. Now let's say I want the, so I'm saying to select title. So I'm just editing the query here. So I also want, sorry. Yeah, so you can automatically see the results that have come. Let me extend this. Let me go to my formulas, put a name manager, and I will say this is books data. Okay, this is the books data. And now in my query, okay, he had done a multiple thing, but no problem. I can say this as books data. Okay, so now you can see that something different happened. So let me just insert a sheet. This is my reports. And for the ease of it, let me move this to a different place. Okay. So here, let's say we have languages, English, German, various things. Let me pick the English. And now look at these results that are coming. Sorry. Look at the results that are coming. Here, you have no data. You have no data. You are automatically getting it like a SQL query. What is the query? I want where the language is English. No, I'm only starting with the basic thing. Let's say the author. Okay. Instead of my language, I want to read all the books from this author. And the author 11. So author 11 had written the coding and like this video, my first book. So if you see, this is like a filter and you are getting a filtered reports in different place. It's completely different place. It's a different thing. And when you look at the query, I have just given as a books data. So it is given into a database. So I have given it into a books data, a database. So he wanted to combine two queries, so he had done it. I can also results will come because I'm taking a simple. Let me just for the use of it. What was the formula I have written? You will get it here. Now this is the formula. I am saying execute SQL query C4. This is C4. Instead of C4, I can also change this as a query. Execute this query in this books data. So database is separate. This is separate. This is just a mini version of it. What is possibility? Possibility is enormous. Possibility is enormous. Enormous meaning you can actually get the data from. He has also shown some. Okay, so the data set 1, data set 2, he has merged. Second option. He has also said that we have seen that it's not in the same sheet, moved it in a different sheet. Look at the possibility. I will extract the trial balance, or I'll extract the day book from the tally. I'll extract the day book from the tally, and I want the data in the similar kind of it. So can I get it? The answer is yes. You can easily get it in the same format in which you asked. You can get it. There is absolutely no issue. You can always say that, hey, I want this data from this. Can I write a query? The answer is yes. That is what I want to show a power. Let me just give a sample for you. Let me connect a tally data and get the. Give me a minute. Let me share my screen. Is the screen visible?
Yes, sir, visible.
Okay. So this is a typical day book which I have extracted from the tally. So I have extracted a day book from the tally, and I have titled as the day book. Instead of this, I will say day book. Let me just format it for the ease of reference. Okay. Okay, no problem. I need to set the date in that way. Okay. So I am now from the day book. I want to see all the payment vouchers. And here I can do order by, ascending, descending, group by, like a pivot table. SQL command can help you to create a pivot table, create a sort, create a filter, all in one go. That's the power of SQL. So now I have just extracted, I want to select all the ledger, and let's say, let me just see if there is a cash. Okay, there is no cash. Let's say, okay, I'll just change this as debit properly and credit. I want to see all the vouchers where the debit amount is more than 10,000. So I'll say select the date, the ledger, and I want to know the debit. Okay, from where the debit amount is greater than 10,000. Now you can see automatically the respective data set has come. Wherever the amount is more than this, I have got the transaction. So you are now creating a dynamic dashboards. Can I make this even more dynamic? Let's say amount greater than, I will even put this as amount greater than 10,000, right? Now this, you can program it better. Okay, I will say this and of course, you will not get any results, but so this is debit. Now you can see automatically debit more than 10,000 you have received. Let's say I will say debit more than 5,000. You will get some more list. So let's say transaction count. So there are 162 vouchers more than 5,000 and 15,000. So there are 92 vouchers. Now, can you see this is acting more dynamic? Now, what you can do? Now, what you can do is now left to you, your imagination. You can call multiple data sets. I want to see the transactions where party name is this, amount greater than this, and the date in between 1st April to 30th April. First one, you write any number of conditions or the transactions posted on all holidays, all Sundays, whatever be the days. Let's say I'll make this day. So let's say day of week. Okay, so whatever is the weekday which the transaction has happened, so it is going to pick, and you can give that condition. I'll say weekday is equal to 5. You automatically got the transactions that got posted. Let's say I want to bring debit, credit. Let's say I want to get credit also. Of course, when you're writing a SQL command, you have to ensure the naming, everything should be the same. Now you can see automatically the date, everything has come. So this is, by the way, this is just the beginning. I want to give a little basic before I go to the next class. In the next class, I am now going to see right now what I have done. How did I get this tally data? I just went to the tally. I just said export and said export to Excel. So the data has come into Excel and I just did a copy paste, Control C, Control V, came back here and just pasted it. That's all. That's the simple thing I have done. Now, the next thing is, can I make it even more dynamic? That is, my tally would reside there and I will write the query. It will automatically extract the data basis that query. The answer is yes. In the next session, I'm going to do it. But next session, if I do it, and if you don't even get an understanding that how I am writing this. Now, people may ask this, okay, hey, look, in my Excel, I'm typing, I am not getting this. The answer is, you need to install Python, download it on the open source. You download the Python and install it. After it is installed, if you notice, I have added a small add-in called Excel Wings. Basically, these are the, you have a lot of add-ons that you can add once the Python library is done. Now I have added these Excel Wings so that now I will be able to write these SQL queries. I should be able to write these SQL queries. That is what we have done. Hope you are clear with this. I am moving to the next part of our discussion today is use of ChatGPT. Tarun, anything you want to say?
Nothing, sir.
Okay, all right.
Nothing, sir.
Yeah, let me see if there are any queries in the chat box. Ravichandra, we are non-tech. Please elaborate. I think Ravichandra, you have got the answer to this. Okay, we'll move to the next part of it, which is using ChatGPT for you to write the code automatically. We will be writing a small script. It's like I'll write a query and I will try to get some result and I'll publish it. So let's go to the second part of it. I'll stop sharing my screen. Tarun, over to you. Tarun?
Sir,
Can you share the screen?
okay. No.
Yeah, go to the use of queries. Now, whatever we have done in Excel, now I'll try doing it in Google Sheets. Yeah.
Sir, I have taken sample data, sir. For example, we need to calculate how much this 2019 sales data. So we need to do sum. For that, we will write in a, we'll ask ChatGPT to do sum, to get formula for sum. For that, we will write in a one query prompt. We will write in a prompt. It is write an Excel formula to add up values in cell C2 to C12. So we will copy this one and we just write on a formula like GPT. And how to invite commas. And just we will copy and paste this code and we will click enter. It will give an answer how to do some formula. So this is the formula for sum. So we will here do sum C2 C2. So like this, we can get formulas from ChatGPT. So we can do another formula search. So it's a basic formula to understand for the audience. I did like this. There is another formula, sir. We need to get, there is an email data, sir. So we need to get a first name, sir. For that, we will write in another prompt, sir. It is write an Excel formula to extract all the text before the character SL, sir. So we will paste and copy this one, sir, and we will write in a so it is the formula, sir. So we will copy and paste this one. Here the so like this, we will get first name, sir. So we can use ChatGPT like this, sir. We can get another information also, sir, like tell me about our India. So when we write like this, so it will give about our India, sir. Like this, small examples we can do, sir. We can write like this.
Right.
Like this, we can get information in chart sheet, sir, by using extension sheet GPT, sir. That's it, sir.
Okay, great. So now let us look at this in another example where I want to ask a query to ChatGPT and anything you're seeing? Tarun, you are saying something?
Nothing, sir. Continue, sir. Okay.
Okay. Now, let me ask a query to ChatGPT that how do I perform small script, and I want to get the GPT to write a small query to me. How can I do that? Okay. So let me share my screen. Okay, so I had a very small data. Let me just. Okay, this is my Google Sheet, and let's say the data set in Google Sheet is like this. Oh, sorry. Let's say the Google data set in a Google Sheet is like this, where you have share capital, reserves and surplus. I'm just given a simple example for you to understand. In the next session, I'm going to give you a complicated solutions that have been built. But before showing you the solutions, you need to know what is the approach that we have done. I want to segregate this into two different buckets. If it is an Excel, you will say text to columns, text to values, use delimiter, semicolon, it's done. But if you have to write a macro, you can record a macro and do it. But in Google also, you have something called macros. You can just go to your extensions. you can start recording in a macros and doing it. Or you have a thing like you can apply a script, right? You can say, copy this. I've just copied this to the chat and I've said, so can I get a good code for Google script to split this data into multiple lines and columns? I'm just copying this. Let me ease off it. Let me just go to a new chat and I'm just pasting this. So I've asked, can I get a code for Google script to split this data into multiple, though I did not use the word script, T is missing, it understood that I'm asking for a Google script. Okay, it says, yes, suddenly below, here is the Google script. I can just click on this copy code, the code is copied, and I can go to my, I can just go to my, this, and in my extension, in my app script, so leave this, let me go, and I'm just copying a new script, and this is the function, and copying. So I am just copying. Yeah. So I've just copied. It says this is the function you want to execute. I'll say go ahead and execute. Now data gets split into each thing. So the power is you don't need to know the coding today's world. Gone are the days where you have to hard code and remember. Like people who are familiar with macros, you will say dim, define in the memory A comma B comma C, define S1 as worksheet, set S1 is equal to sheet 1, delimiter as semicolon, for I is equal to 1 to end of the rows, and each row, if you find the semicolon split, you write the entire code, right? You don't need to know. Now you see it has written the code. All that you will have to do is save this code and select the app scripts. You go here, extension, select the app scripts, leave the, and execute this. That's all. So the moment this is executing, so this is something wrong. I have not saved the file. Okay, it just got, so it just executes and you will find the result. Now, in chat, you can ask any question. Two things. One, what our Tarun has shown, you can start with is equal to GPT. I want to know this inside a script, inside a Google Shift, it is searching somewhere and getting the knowledge and giving it to you. Option one. Option two, outside it is go to ChatGPT, have your login account, ask this question, copy this, execute it. Of course, you got to iterate it. First time when it is giving you, it is going to give you it in a little crude way. You got to iterate it. Okay, I want to have step one, I want to have this, I want to have this. This is what it is going to do. So in the next session, I'm going to show you a fully running program, and I am not going to write a single code. So we have designed everything just to copy paste, copy code. Each may broken into modules. We will just show you copied this, press this button. You'll automatically see some magical reports that are coming up. So the two things which I wanted to tell you in this tech session is start using wherever, if you have a little bit basic knowledge of the coding or understanding the way the code works, get the systems to code for you. Second, always have a valid Microsoft license. Second, try installing Python on your system and get the SQL, write the SQL. Of course, this video recording would be shared to you. See how you can write the SQL queries. In fact, the only thing you got to be very clear when you're writing the SQL queries is the language should be simple, straight. The select. It's easy to learn. It's in English. Write a simple thing, and the power of SQL is enormous. You can join, you can take two tables and you can find union, intersection. You can do all those things. If you say that the tally data before audit is this, tally data after audit is this, I just dumped the trial balance 1, trial balance 2, find the diff of the trial balance, which ledger is not matching, which voucher is not matching, all sorts of. In the next session, what I'm going to do is from one tally data set automatically create different queries, which is required for your audits. You want to see vouchers with GST, vouchers where TDS is done, TDS not done, or purchases you want to group by, you want to do a summation of sales by customer by month. You want to do all sorts of the reporting. All of that can be done. So you just need to imagine what you want. You can need to structureize and put it as a query, and which we are going to execute that. So this is just a beginning. Along with the presentation material, I'll also share you this Excel, what you are seeing, so that for you to practice and get hands-on to it. So these are the two things that I intended to share in today's session. Tarun, anything that we missed to share, discuss in the tech piece of it?
This is okay, sir. Nothing, sir.
Yeah, okay, great. So we have understood the SQL and we understood the how to use ChatGPT in writing the queries. We have just seen the basics. So start between now, this session to the next session, keep exploring how you will be able to generate the reports on your own. Yeah. With this, we have come to end of it. Okay, the Srinath is asking, please elaborate on free ChatGPT and subscribed ChatGPT. What are the advantages of having subscribed ChatGPT? Okay, so Srinath, now what I'm using is default, which is GPT 3.5. There are many GPTs that are available. So in GPT-4, which is the subscribed application, you have, firstly, the response time is a little faster, but you have an ability to call that as an APIs. What is that? Right now, if you see in the Google spreadsheet, there are two things which you have seen. In the Google spreadsheet, Tarun has written GPT open bracket and he has written a query. Now, it's Google, it has integrated and it has given you some results. So since it's the open, it has integrated and it is given. But when it comes to you have your own application like Tableau, Power BI, your Excel, and you want to write query. You don't want to go to the Chrome browser and write it. You want to get it here. A paid version, you will get a browsers plugins. Then you have got a code, but I don't know how to interpret the code. How to modify that. In a plain vanilla thing, I have to do multiple iterations to get the code that I want. But can this code be broken into modules and can it interpret? It can interpret in the subscription plan. I would always suggest go with the free version, explore it. Free version, even if you can get master 5% of that, it's like huge world, which is like your performance itself will change level 1 to level 10. If you're using the free version, 5% of its capabilities, if you are able to use, is like you've reached like a peaks, right? Once you mastered that, then your hunger for reports, hunger for analytics, hunger for giving it. Then you need like plugins, like how that Excel wings, which I've shown you, an open library which I've added to write my SQL query. So then you need a little more power plugin. So you will be a power user. Then you definitely need to, no longer the free version would be applicable to you. Hope I think that gives you a rough idea, Srinath. When will be the next session? I don't think the date for the next session is being set, but most likely the next session is on 19th of August, Saturday. You will automatically get an email of the session from us. But 19th August is the tentative date which I have seen in the calendar. All right. Any other question from anyone? Great. I think we have addressed all the queries, and we will be sharing you a Google form, which is a feedback. so that you can let us know how the session went for you, and if there are any things that you want to add as a topic that we have to take up for the upcoming sessions, give your feedback. Your feedback would help us to plan our sessions. And at the end of the feedback, you'll get a link to download these files, whatever the PPT and Excel that we have presented, you'll get an access to download that. So in a way, I also need a feedback. So, and you need the material. So please go through and fill the feedback form and download the materials. I thank each one of you for being present here. And a special thanks to Ashika, Jagdish and Tarun, without whom this session couldn't be so beautifully presented to you all. Thank you, everyone. And thank you, VNV team. Good day.